Hello, everybody. I'm glad I'm not on my own. I was told there was going to be only the two of us, and we have two distinguished guests. So we're going to have a short conversation about reshaping capital markets. I have been in the capital markets for 40 years myself. Ex-CEO of a bank in Switzerland, then I was in the board of another bank, then with my own advisory company, and now I have a company really managing assets, but I only manage digital assets. So I came from that old world into the new world. I've been doing this for 10 years. So we have things to say about it. Why don't you guys introduce yourselves from the left and just a few words about yourselves, and then we'll go through the questions.
Sure. Hi, I'm Odera Umezoking. I'm the founder and CEO of Elbow, and Elbow is a real-world tokenization platform. So we take physical assets in the real world, anything from real estate to private credit, and we tokenize it, make it available for investors on the blockchain. So we've been focusing on this for a couple of years before the real world asset trend, which is now taken over decentralized finance, before that narrative came to life, and very happy to be here.
Maher, go ahead.
Sure. After 28 years of working in banking, prior to that, I was actually working on developing software as games when I was very young, before teens. Computers were primitive, so the games were primitive at that point of time. So went to banking industry. Before that, I accidentally co-founded a company, which is to do on venture studios, how to build venture studios. When the term was not even coined, already was coined in 1995 by Bill Gross in the US. Worked at Citibank for 15 years, worked in Islamic banking from faith perspective, left the banking industry, working on board on a lot of companies. One of the family offices I'm at, it's a 165 years family business. They're the people, if you're in UAE, you probably know the iconic businesses such as Emirates NBD. We co-founded Emirates NBD. We co-founded Etisalat as the 12th largest telecom company. We co-founded Second Bank CBD. We co-founded First Insurance Company in the country. We co-founded where your electricity come from, water electricity and Sharjah electricity as well. We co-founded many things. One of the verticals we have is on smart mobility, and the metros you see, we actually the sole OEM provider for the metro since inception. We're the agent of Etihad Rail. We also work in a space of waste management. I also sit on the council member of the circular economy, where I'm also working on an AI for our own waste management to do predictive modeling. We're also working on digital twins for our factories. I'll stop at that.
Fantastic. Well, as you can see, heavy duty experience here on the two gentlemen. So you will learn a lot today. Hope so. Perhaps one issue I'd like to touch upon at the beginning is liquidity. When we raise funds and when we have projects going around, what we do as bankers or VCs or whatever we are, we go and look for money, all right? And although people say there's a lot of money around, my view of it is that there's only intelligent money around. That's the money that we want, by the way. So we have now this new asset class, cryptos, call it tokens, call it whatever you want to call it. So, Odera, how do you see this tokenization of real-world assets having an impact on the liquidity of the activities we're trying to do?
So we've seen this ecosystem, the blockchain ecosystem, evolve over the past decade and a bit. The narratives have come and gone. We started up with the Bitcoin narrative. We moved through the ICO narrative, moved to NFTs, and now we're seeing all the hype has been and left the system, and we're actually now seeing real value, real fundamentals becoming the dominant narrative as it's moving in. So you've seen we all are aware of Uniswap as a major exchange. Uniswap recently announced an airdrop, a share of revenues to token holders. What that did is essentially signal that a lot of exchanges are getting a lot more confident about how they are seen with regards to being a security. Because if they're airdropping revenue to industry, that basically could be seen as a security, but now the SEC is heavily under attack. So this is the beginning of a shift in the narrative, more towards fundamentals, more towards real drivers of business value. Real assets are a part of that bigger overall narrative. Assets that are generating real value in the real economy, that are being used, are actually now being tokenized at an ever-increasing rate. So from the perspective of liquidity, if you're able to buy a smaller piece of a productive asset, a smaller piece of real estate or of a loan or a piece of a startup even, what this does is two things. One, it's dramatically democratizes access to these investments, to these assets for the common person, for anyone, in fact. You no longer need to be as sophisticated and wealthy an investor to own a piece of a large commercial piece of real estate here in Dubai. So the liquidity is dramatically improved because there's just more accessible, more liquidity that can on-ramp into the ecosystem. And the second thing it does is, from the owner of the assets, it's far less risky. You can actually now sell smaller and smaller pieces of this to dispose of an asset. You can tokenize something that would have been expensive to sell because of transaction fees, and you can take a long time to sell because it's a larger deal. And instead, by listing it on the blockchain, you could actually have it bought in much smaller fractions. So the liquidity is much dramatically increased, and it's actually part of a sustained narrative in this ecosystem. So we're going to see a lot more tokenization.
Very good, thank you. How about you, Mar? What's your view on liquidity and tokenization of real-world assets?
I think I'll go a step back overall. Now, many of us probably may not be able to access the assets we wanted to really aspire that we want to own. And I'm sure most of you, if not all, are experts in understanding those assets and what tokenization bring all about. So I was yesterday in a dinner with very close friend of mine, and one of them was showing off, saying that his daughter made from just cryptocurrencies $12 million. So he actually took the phone off, and I could see it. And her daughter is only 13 years old, and how he made it. But he himself is a guru of cryptocurrencies, to be honest with you. So he's created his own exchange and so forth. Now, imagine when you're so young and you aspire to have, as you rightly mentioned, a piece of a property, which you cannot own. But if you divide these properties into various pieces, small pieces, so you have a small token of that. When I was discussing this probably 10 years ago, I said, what's the value of taking a small piece of it, because your income going to be very small. But imagine the power of owning those small pieces from various things, asset classes available. For example, in art, inexpensive art, which is getting tokenized as well. That will overall, those people who have money could not really invest because the investment amount was really large. Now you can invest that small amount. So now you have more people, so you increase inclusivity of people coming in and invest. We have still around, despite all the advancement in the banking system we have still 3 billion people unbankable because of the challenges of the KYCs and so many hurdles that the banking sector brings. You were a CEO of Standard Chartered, I was a Citibank, so we know what the challenges are. But with this kind of methodology, you're actually including these people. I will put an example to Ant Financials. Ant Financials is one of the biggest financial centers that Alibaba created. This is one of the alliance company. And what they did, those who have small amount, they can actually invest with small amount. That's why in no time, they beaten all the what we call the big wealthy financial centers, because they allowed the Chinese to invest as low as $5. And imagine they are now one of the biggest financial centers in just 3 years' time. Of course, they started 10 years ago, not only today.
Yeah, great. So just going to give you a bit of perspective on something very concrete. At Carter Capital, in our company, we're asset managers. We really manage wealth for clients in digital assets, called it cryptos. But at the end of last year, we started tokenizing real-world assets. I want to give you a view for liquidity. So we picked up a gold mine in Chile. I'm Swiss, but I was born in Chile, so for me it was easy to do that. That has 7 million ounces of gold in the ground. That's roughly $15 billion worth of gold, with all the reports and everything you need. We haven't yet started tokenizing it. We are in the process of starting this, and we have already been offered to buy the entire project. We haven't done anything. We have nothing to sell. Our tokens are going to be in the market in 9 months from now. No, maybe 6, but doubt it. So that's the impact here. We're also doing another project. We're actually NFTing Amazonian land and Amazonian trees, and we are tokenizing the canopies of the trees with the objective of selling carbon credits to the airlines. Our market is only the airlines. There as well, we have a tremendous amount of investors ready to go, but the product is not ready yet. So what I'm trying to get at is the following. There is liquidity for these kinds of projects. There's no doubt about it. And what the gentleman mentioned here about democratizing finance is the key here. Give you an example. I would anticipate that the tokens of the gold mine will not be more expensive than $1 each. And I would anticipate that the NFTs of the Amazonian land and the Amazonian trees are going to be a lot cheaper than that, by the way. I mean, that everybody can get into this. So that's the impact on liquidity. My old markets, as an old ex-CEO of a bank in Switzerland, are very tight right now. There's not a lot of money around, and it's difficult to get that. But in this new area, if you have the right product, underline right product, right people, right financials, it's not very difficult to get. So my second question, I'll start with Mar now, is fine, this is all great. By the way, I was an auditor before being a banker. I was trained by Pricewaterhouse. So I understand one or two things about risk. So my question to my colleagues here is, how do you see the potential risks associated to decentralized finance vis-a-vis traditional capital markets?
One of the really known risks today is the regulation themselves. You see, you have different regulation from different jurisdictions, unfortunately, and that alignment is not happening. I definitely foresee that digital space will going to be there and central bank will have to get involved. You know, recently, a few months ago, we got regulators coming up from US accepting what you call cryptocurrencies overall. But, you know, regulation is the challenge. We don't have any alignment challenges because the government don't align to these things. Luckily in UAE, we've created VARA, which is very prone to accept all the innovation advancement happening. The other challenge I see is the education. Many people, like yesterday along, we were a friend, the same friend, one of the other friends saying, look, I would like to secure my future for my daughters and children overall. How do I do what I go and do about cryptocurrencies? He has no understanding for cryptocurrencies because there are very few information available because it's still recent, right? The banking system has been there for over 200 years. Is that correct? 250?
Easy.
250 years. We just started, to be honest with you. But if you go to the old banking system, then it's been more than thousands of years. So education is lacking, and that is another challenge and posing risk for people understanding that. The technological advancement itself in the whole space, I think it's going to go faster. Currently, it's not, because with AI coming over and, of course, quantum computing coming over, that will really overlap it to be very, very, very quick and advance it. So those are some of the key challenges I foresee for myself.
Oh, it's very true. Odera, what you view on risk?
Yeah, I'd say the same. There's some overlap there. So regulations is absolutely a big one. Regulations are a risk to actually the real-world asset tokenization space. We don't want to stifle it in its infancy. At the same time, of course, with any new area where there's money to be made, there can be bad actors. So we have to be careful. We have to make sure that real protections are in place so that investors are protected. You don't want to have a bad experience and kill the seed before it really has a chance to properly germinate. The ecosystem is overall actually a dramatic improvement to what we have today, however. The transparency that you have through smart contracts makes it far more attractive to be able to actually see what's happening across the flows of funds. The transaction costs are lower. The fact that you have a lot of disintermediation and fewer middlemen to be able to get a deal done because it's happening on the blockchain. So I'd say overall, we're actually going to see a reduction of risk when as this ecosystem grows.
It's interesting what you're saying. I'll tell you why. Because I see this in a very different way. Perhaps because I'm an old banker that came from that world. I'm very aware of risk in our own industry. And I'll give you a very practical example. As I said to you, we manage wealth for our clients. I decided that my firm was going to be non-custodial. We don't hold 1 cent from our clients in our accounts. All the cryptos are in their own wallets in third-party exchanges. The reason why I did that is because I am not comfortable with the risk of holding those assets in our own accounts today. I'm sure that's going to change, but it's to that extent that I think that we're not yet very much into risk mitigation. We need to do a lot more than that. And in my opinion, we need to include a lot more old bankers into this new field. I've been in this field for 10 years now, right? When I left the banks. But I think that we need people that understand that transition. Going to transition, so I'm going to start by Odera right now. You two guys spoke a bit about the regulatory environment. So what I'd like to have from you, because we live in the UAE, at least you guys live, I suppose all of you live here, or most of you. So Odera, what's your view on the regulatory environment for cryptos, call it, in the UAE?
So I'm, for caveat, I don't live here, but but we've been heavily researching where to actually set ourselves up as Elbow. And we've looked across dozens and dozens of jurisdictions. And actually, the top 2 locations that really fit some of that is welcoming for the blockchain ecosystem, where capital formation happens, where investors are ready to meet projects, and there's actual adequate IP protection. One of those is the UAE, the other is Singapore. So actually, this came to the absolute top of the list after all our research. So actually, we are incorporating and having our IP here and housing our IP here in the UAE for that reason. It's a good environment, very, very good.
Maher, what's your view? You are from here, man.
Yeah. He's right, actually. The reason why there's a lot of alignment between Singapore and UAE, because they actually collaborated together on working out. So we looked at the model, what Singapore had, and then we took that over and then improved over it. And then there's collaboration started between the both countries. So one of the startups we were thinking of setting up in Singapore, and because what Wara came in now, we said, no, we were going to set it up in UAE itself. So what I can tell you, if I take a macro picture, because I sit in a couple of regulatory bodies where we actually put up policies, we do not do things our own. We actually go to a market specialist. We go to the private companies. We talk to them. And we ask them, what do you need to do? So collaboration is a key essence for us to develop any policies, whether it's an economic policy, whether it's a digital policy, whether it's anything to do with waste management and so forth. So all these policies, we do it in collaboration with the private sector. So I remember even when we were talking about metaverse, it was all about speaking to the companies. How can we do that thing and how can we regulate it? And this started that way. So it's very progressive. We're very careful on what we need to do. Excuse me. So we're watching what needs to be done. We're actually going to be the capital of cryptocurrency, the capital of the digital world as well. We've already announced the digital economy into 2022. And this is a big part of it. The adopting of the new technologies, cryptocurrencies and blockchain is a big part of it. Today, almost all the government services are on blockchain. Almost all of them. We were the first country, the first ministry in the world, the Minister of Economy, to start the metaverse platform. It's using Web 2, not even Web 3, to be honest with you. And I was there literally seeing it happening. So we're very adaptive from that perspective to see what are the right things there. And if it makes sense, we will definitely adopt it and make it more useful cases for us.
Yeah, those fantastic answers. So on the regulatory environment, not only because you are from the UAE, but I truly believe when I'm saying this is an incredible country. I moved from Geneva to Dubai 10 years ago, and fantastic at every single level. But when it comes to regulatory environment, I was an advisor to ESCA for some time 2 years ago as a person, not as a company. And I've seen the evolution of the regulatory environment here. I think that the UAE is pointed exactly into the right direction, but there is a difference between being an exceptional country and a great country. This country is great, not yet exceptional. I'll tell you why, because I always tell my friends from your country, and many, there's one part of the equation missing in this country. We don't have OTC crypto fiat crypto banks yet. All right? In my country, Switzerland, if I have $1 million and I want to buy, I don't know, USDT or whatever currency I want to do, I go to one of these banks that are regulated by FINMA, by the way, by our regulatory environment. I said, here's $1 million, give me whatever you can give me in BTC or whatever, and also hold it for me. I cannot do that here. So I always say to all my friends, the soonest that you can get there will make the UAE an exceptional country, from a great country to an exceptional country. I think that when you say you're careful, I'd like to hear your views on that.
I'll tell you why, because we just got off the gray list a few days ago, by the way, right? And we were discussing it outside as well. Unfortunately, and I say that in all the panels and keynotes, we put a lot of double standards when it comes to regulation globally. There are a lot of other countries. I mean, I worked in Europe, so I'm saying it from based on information. I was managing risk. So there's a lot of countries even not applying Basel II, Basel III, let alone Basel IV coming up, right? And you're a banker, you understand what you might mean by that. These are very high, tough regulation from banking industries. But we were applying it even more stronger over here, and we were still on a grey list. So we were like, what's going on, man? Just because we're a Middle Eastern country. So that's why we're taking a kind of a careful approach. We don't want to jump the wagon very quickly before anything happens, and that's why we're working on an informative basis. The many things we're trying to do, we're not really revealing it and what we want to do, but this is coming as well.
I'm just going to finish with this point, then we'll move to the next question. I think that it's not only about the UAE, this happening in other countries as well. What needs to be understood is the only way to do it is to include crypto fiat crypto banks inside the regulatory environment from the central bank's standpoint and from the regulator standpoint. For in Switzerland, for instance, what we did was we took these banks and told them, go get a license with the big chaps here, with the chaps that are giving license to normal banks, to standard banks. They did it. So that's the way to do it, in my opinion. Anyway, let's move to the next question from a data standpoint. You both spoke a bit about giving access to people, democratizing finance via this new asset class. Can you give us your perspective, Oder, on that? You started on that, but I'd like you to go a bit deeper if you can. Democratizing finance.
Absolutely. So when I first got started in the blockchain world, this is going back about 12 years now. One of the things that really drew me to this was the idea of the sovereign individual. And this concept is really about an individual who is so fully empowered that they have control of themselves, fully autonomous individual. They can bank themselves, they can travel across the world and live independently of any particular state. This concept, this notion of an idea, was one of the reasons that gave birth to the venture studio that I founded about 6 years ago, which then gave birth to Elbow. So at the core of everything we're doing is about empowering and democratizing access to finance. Now, stablecoins are one of the biggest killer apps in crypto today. 130 billion or so dollars in stablecoins today. It's the killer app, really, you could say. Stablecoins are necessary for payment in countries that do not really want to connect to rely on their own fiat currencies. We have engineers in Nigeria today. Our engineers ask to be paid in Tether instead of being paid in Nigeria. Unfortunately, just given the state of local affairs, they believe that there's a more stable option for them to be paid in stablecoins. So this is one small example of being able to be empowered by the blockchain. If it were not for something like this, they would have a lot of trouble actually holding onto the value of the money that they earned in their salary, right? So this is a very specific, concrete example. And we see in the real world asset space, we see two big groups who are going to be adopting this. Number one, it's going to be any person or company in a country which really wants to be connected to a stable asset base, that wants to be disconnected from any instability, especially in local economies, whether it's through inflation or anything else. Maybe their assets could be seized without their permission. That's number one. Number two, these are any users of stablecoins, especially on the blockchain, any users who would be holding onto USDC, settling trades, who may want to be able to make loans and have a denomination which is the same when they get repaid. So that's the second group. So across all these use cases, it brings the concept of real-world assets and stablecoins and DeFi more broadly into focus.
Great. Mario, so your view on the democratization of finance, how do you see that?
I think it will provide access to people who don't have access to bank, as we said today, right? But I take a step forward a little bit on what's happening on the banking industry and regulators particularly. Why do we think regulators are not really for it, or we have a different kind of regulators acting differently? Because the centralized government always believe in control. When they're not in control, they're scared. Bankers always want to be in control, and the regulators want to be in control of the bankers. Now, what do we need to do to make sure that happens? Now, we all know, by the way, the governments are working on our own digital currencies. UAE announced on digital currencies. You heard about that, right? So many other countries are working on it because they want to be in control. So I think what will make it easy for people to access when these regulators start speaking to the people like who are doing the cryptocurrencies, and how do we make a regulation? We share the control. I still believe, I believe in decentralization, don't get me wrong, but I think we still need to have a guiding principles. I know the challenges in some of the European markets and even the US, they're control freak, they don't understand it. So they make it very difficult for people like you and I to come and be in control. Our government is different. They don't believe in centralizing everything. They want to make sure they work with you, and if there are enough example being done. If that work continues, that will increase the inclusivity. Those people will be able to access so many things from the financial world which they're not able to access today. I mean, most of you probably have access to bankers, but keep in mind those people who do not have access to banking. I'm talking about countries like still in China, they're still in Indonesia. I visit them. Nigeria, I was there in Nigeria last year. We were trying to run a program with the government and along with universities. They still don't have access to many things. So that will open up a real complete world. The global south will be completely different.
Before being a banker, when I was an auditor, I did many years of auditing in Africa. From Geneva, they'll send us to Africa to audit different things. And the one thing that made me realize that this was very true is the fact that in the smallest village in Africa, you have all these little kids running around with phones, right? And this new finance is going to go through the phones, among other things. So I think you're absolutely right. I need to ask a question to the managers of this event. We don't have a prompter with timing here. Hello? You, the man there. How long do we have? No, it's not running. There's nothing there. Oh yeah, well, just let me know. Okay, so the next question is a really hot question. We're all talking about right now about this. We had Larry Fink and Jamie Dimon and all these chaps for a long time saying that, sorry for my French, that this was all crap, that everybody was fraudster, that, we were going to scam the world with this new asset class. And just a few months ago, they all jump into it, all right? And they're doing very well. It's over $1 billion being added every day into this new asset class, the ETF in Bitcoin. So my question to this distinguished gentleman, we'll start with Maher, is how do you see traditional institutions adapting to Web3 finance? To be honest, they have no choice. I mean, look at the debate was going on between Jamie Dimon and his own company. Jamie Dimon was last year, even before, was coming and speaking against the cryptocurrencies. His company was unloading billions of cryptocurrencies. So we could not really interpret that. So that's a debacle going on. 2 minutes? Okay, cool. So eventually, even Larry Fink, I don't think he's being honest about it, to be honest with you. So I think they will definitely have to sit and understand this, how it's going to be done. They're using a program of blockchain themselves because it's benefiting them. They understand it very well. So eventually you will see a good cooperation happening already, for sure. You already started with the blockchain technology. That's the important piece. So all the banks, some of the banks I know of, they already have adopted a private blockchain. But it's a matter of time they'll bring in the other part of it as well. And this is how the collaboration will happen. But it's a long way to go. It's not an easy trade, to be honest with you. Of course. Odera, what's your view on that?
Sure. Look, banks have interests to protect. They have capital markets at in the palm of their hands. The ecosystem doesn't benefit them if they lose control of that. So naturally, they will say and do whatever is necessary to protect their nest egg. This is where their revenue and their profits come from. But inevitably, given its decentralized nature, we've seen the evolution of this space, and it just has proven to be unstoppable. So that narrative of crypto is bad, crypto is a scam, crypto is et cetera, as you'll notice, has started to change. We now have trades being settled in JPM coin, launched by JP Morgan. We now have JP Morgan having launched, I think it's called Onyx, which is their own real-world asset tokenization platform. And we have several other banks now looking at real-world asset tokenization as a real way to connect, again, their existing businesses to what's happening on the blockchain. So I'd say fundamentally the narrative, their turn, everything has started to change and it's not going to go back. They're going to be part of this new ecosystem.
Do you all know who Scott Stornetta is? Anybody here knows Scott Stornetta is? He was in Dubai 2 days ago. I spoke at AIBC and I had the honor to share the stage. Scott Stornetta invented blockchain technology in 1991, together with another chap. There were 2 PhD students. They actually invented a DLT, the ledger, right? They use it for a complete different reason. They use it to timestamp documents. They needed a ledger to do that. And then Satoshi did whatever he did in 2008 and everything that happened afterwards. But I had a long conversation with Scott there, and he told me something very interesting. If you go back to adoption and where we're going to, he said to me, we knew this was going to happen in 1991, right? I'm an engineer by training, so I was following this as an engineer, although I was in banking, but I was following it. I knew that this was coming. So what's coming next is really a deepening of this situation where pretty much every single bank, every single financial institution will get into it, and then eventually we'll get mass adoption. We're about to finish this, so I'd like to open to questions from the public. Any question is a good question to any of the gentlemen here. Please go ahead.
You ask all the difficult questions to him.
Can you give her a microphone, please?
Now we can.
Well, why don't you take my mic?
I'll go to you there.
I'll bring it to you. Thank you for this.
Try. I'm forward try.
Thank you. There's a lot of gentlemen today. Amazing. We spoke about regulators. A little piece of hope, Gustavo. The Italian regulator, they call the crypto exchanges in private meetings to know what to do and what to avoid. So in Latin America, there are some that are trying to study. But tokenization, that kind of regulation, we have different approaches from within the countries. But what you're talking about requires 3 different levels of regulation that you need to embrace. You have the tokenization regulation in basis that it's very global, international, you can work with it. When you're talking about physical assets, you have that underline of regulation that it's not only, for example, in the gold case you said, the mining regulation, but also the corporations regulation that's underneath the country in which the mining is being held. And if we're also assuming that these are democratic projects, we're talking about consumer laws, we're talking about transactional costs, we're talking about customers that are not going to be able to sue in case something goes wrong within the project.
What is your question?
And then we go to the custom. How can we solve the internationalization of the when we acquire the token? Because that is something that, at least in Latin America, is happening right now.
How are we going to solve what exactly?
When you go into these international projects and you don't have the DNA to buy the tokens directly, and how you make sure that you're actually acquiring something, because that is a layer that haven't been solved.
We got it. Darren, you want to give it a stab at that?
Thanks. So if I understand your question, you're asking about how to handle the internationalization of assets, essentially. So ownership is now distributed not just across one owner locally or one owner internationally, but multiple owners internationally. So you're right, it's getting far more complex. Tax comes into it, regulations come into it, property comes into it. There's a lot that has to be worked out. Honestly speaking, we don't know yet. Regulation always lags innovation. On innovation, we'll find a path to capture and create value. Regulation follows. It could well be that you need countries like the UAE, like Singapore, to actually lay down a framework for others to follow. This is what we've seen, obviously, with places like Switzerland, the Bahamas, and Barbados, as they've innovated and made crypto-friendly jurisdictions for some use cases. And I'm expecting with the real-world assets, that's similarly going to follow. It's going to take a forward-thinking regulatory environment, a forward-thinking country to step up and say, we want to make this as simple as possible for everybody so that we on-ramp as much of the economy onto this. And then that's likely to be followed by other countries.
Maher, what's your view on it?
Yeah. First of all, very good question, very complex. Correctly mentioned, there's no answer for that. I'll add more complexity to your question as well, which is the evaluation of the underlying asset as well. How do you do it? At what currency you do it? And the evaluation of the tokenization as well. So, you heard about UN? I don't like them anyway. We need to have something similar but that's going to take some time. Correctly mentioned by Dora, is like, how do we collectively collaborate to make those kind of regulation? We're far away from that, to be honest with you. We're not able to resolve other important problems globally today. So this is going to be a far problem to happen today. It's going to be not easy.
Your question, we could have asked that question to anybody who owns shares in Credit Suisse. Fully regulated bank, the second largest bank in my country, that went busted. We can also ask the same question to anybody who has had shares in the last series of banks that went bankrupt in the US. So going back to Maher, the situation is that we've been for hundreds of years in the old financial systems, and we still don't have a regulatory environment that works. It's not surprising then that in a new asset, such as cryptos, we don't have that. But just to give you one elemental perspective, when I was auditing, and we were auditing certain companies or sometimes governments that were linked to some regulations, we always said that it would take a minimum of 5 years for a regulation to apply. So about 2 years to figure it out and write it, about another year to explain it to public, and another 2 to 3 years to make it happen. So we are at least 6 years far from full regulation. We don't have more time. I'm very sorry about that. Thank you to the great panel members, and thank you to the public.
Thank you.
Thank you, Raj.